Hi, this is Jim Sackman, your Focal Point Business Coach, and this is another of our Success Friday videos. And this week I've titled the video, All Good Things. And if you follow that through, all good things come to an end. And what that is intended to mean is that at some point, you're going to be leaving this business that you own, whether you sell it or not. And for most small business owners, that business is a tremendous investment of both their time and their money. And they took an opportunity cost to do that. That means they didn't get a job and receive a salary. They didn't take their money and invest it in the market and make money that way. So for a small business owner, it really means that they need to get a good amount out of the sale of a business if they're going to sell it at all. And that could be the difference between when you retire and how well you retire. And so it's really important. Now, when I talk to people about selling their business, they really need to understand how much they need. So I asked them to talk to a financial advisor if they don't already have one. And that person should be able to tell us about how much they need from their business to be able to make their retirement successful. Now, the other next step after that is what's your valuation of your business? And the valuation is a multiple of your cash flow plus your net assets. Now, those net assets will be bank accounts, they'll be fixed assets, they'll be intangible assets, receivables and payables, but the net of that is what's important. The other part of that is a cash flow. And cash flow really to me most is net profit plus whatever dollars you have to set aside for capital expenses. Many of the businesses that I look at are in the internet service provider world, and so they have significant capital expenses. If you don't, then that's simpler. It's just your net profit. Now, both those numbers, the cash flow number and the net assets number, are not as black and white as you think. Most small business owners run some amount of their household expenses through the business, and we have to pull those out. If there's some underpayment of family members that are part of the business, we have to add that back in. So there's an adjustment to EBITDA, or earnings before interest, depreciation, taxes, and amortization. On the other side, the asset side, is it going to be based on the depreciated value of the asset? Is it going to be based on the replacement value of the asset, if it's a fixed asset? What about intangible assets? What are your your digital assets worth? So there's all of this that you want to work out well before you talk about selling a company. And I hope that helps get this conversation started. And this is Jim Sackman from Focal Point. Change your business, change your life. Have a great day.